Mullen Automotive stock has just fallen to 8 cents. 8 cents. We're not talking about some tiny pullback or natural dip. This is a company that once traded at over $15 even before any reverse stock splits, now sitting beneath the value of tea sugar that goes into a cup of coffee. And today's drop? It's not just a blip. It was triggered by something bigger, Donald Trump's announcement of sweeping new tariffs. These proposed tariffs, aimed at leveling the trade playing field, are sending shockwaves through the entire stock market. But some companies feel those shocks harder than others. And for a company like Mullen, which is already on the brink, it feels like the final nail in the coffin might be coming sooner than anyone hoped. Let's take a step back. Mullen Automotive has been on a downward spiral for quite some time. It's gone through 4 reverse stock splits in just 2 years. That's not normal. That's survival mode. Each split was an attempt to stay compliant with NASDAQ listing rules and keep the share price propped up above $1. But it didn't work. Every time the price bumped, it eventually crashed back down. And it's not just the splits. It's the dilution. Mullen has relied on toxic financing, issuing convertible notes and warrants at a furious pace, creating new shares and driving the value of existing ones into the ground. Retail investors have watched their holdings get sliced into oblivion. And the board? Still handsomely compensated, even as shareholder equity eroded. Even when Mullen reported revenue growth, like the recent $3.18 million quarter, it wasn't enough to shift the narrative. Because while revenue matters, context matters more. And the context was high losses, legal risks, negative cash flow, and mounting doubts about production scalability. Now enter Trump's tariffs. On the surface, tariffs may seem like a policy aimed at foreign competitors. But their ripple effects stretch far wider. The EV sector, in particular, relies heavily on global supply chains, rare earth materials, lithium batteries, electronics. Tariffs mean higher input costs, squeezed margins, and ultimately less breathing room for already fragile companies. A company like Tesla can absorb those shocks. They've built scale. They have a cash cushion. They control more of their supply chain and can adjust pricing if needed. But Mullen? Mullen is barely scraping by. Tariffs don't just raise costs, they eliminate optionality. They make it harder to manufacture, harder to partner, and almost impossible to price competitively. And let's be clear, this isn't the first punch Mullen's taken. They've been hit with lawsuits, investigated over financial disclosures, and even accused of suppressing critics. Some prominent YouTubers who questioned their practices received legal threats or takedown notices. The message was loud and clear: don't ask hard questions. But now, the market is asking the hard questions for them. And the answer? Well, it's showing up in the share price. 8 cents. A penny stock in the truest sense, and trending lower. The bigger picture is this: when macroeconomic pressure builds, the weakest links break first. Tariffs hurt everyone in some way, but they absolutely crush speculative plays that rely on sentiment, future capital raises, and low production costs. That's Mullen's entire model. Retail investors have carried this company longer than most would have. There was hope. There was faith. There was belief in the underdog story. But that story now reads more like a cautionary tale. A case study in what happens when optimism meets dilution, distraction, and policy headwinds. Could Mullen bounce back? Maybe. But the odds are slim, and the road back is harder than ever before. They'd need new capital, a shift in public perception, and a product that delivers real volume, and fast. And in this environment, with tariffs looming and investors retreating? That's a tall order. This isn't financial advice, it's just one investor's perspective. Someone who's followed MULN closely, covered its ups and downs, and now watches what may be the endgame unfold in real time. If you're still holding, I hope you know what you're in for. Because this isn't just volatility. It's erosion. The lights aren't out yet. But they are dimming fast.